What's going on, guys? This is the only draw and liquidity video you're going to need. The exact stuff that I'm teaching in this, over the last 6 months in my Discord, I've been over 80% hit rate with it. So I'm going to show you guys exactly how to do it in this video. As ICT says in this tweet, first rule of engagement, know your draw and liquidity. Where is price most likely to be reaching for? We need to do a top-down approach to this. The only way to frame high probability draws on liquidity is to start on a higher time frame and then work our way down to the lower time frame. But there's a big misconception with it. A lot of people think that it's always going to be clearly reaching for a specific level. So I'm going to kind of show you guys what to do when it's not reaching for clear levels on those time frames and kind of how we get around that. So we want to do a top-down approach. I like to start off on the weekly time frame, work my way down from 1 week to 1 day, 1 day to 4 hour, 4 hour to 1 hour, 1 hour to 15 minute. And I'm really looking to see if any of these time frames are reaching for key liquidity pools. These liquidity pools, I'm going to show you exactly what they are in the next slide. But in this top-down approach on each time frame, I'm marking out key liquidity pools because these will start the moves. Okay, and that leads to what we're going to talk about over here. And the PD array matrix, these give you feedback for what state price is in. When we combine both key levels and PD array matrix for order flow purposes, we can get a great idea of prices in a buy or sell program. A buy or a sell program is simply, okay, in a buy program, price is going to be respecting bullish PD arrays. It's going to be targeting buy stops. In a sell program, it's going to be targeting sell stops, and bearish PD arrays are going to be respected. We need to understand what we got to feel it out from a higher time frame down to a lower time frame. And once we can get an idea of which time frame is doing what, then it becomes extremely clear what the draw and liquidity is likely to be. So we want to look at key liquidity pools. These are going to start the moves, meaning that's where I'm going to start looking for PD arrays to get respected. And then in that order flow, we're looking for the PD arrays. So the only liquidity pools you're going to use for framing high quality draws on liquidity is monthly, weekly, daily, and session highs and lows. I know people are going to want to go away from this and kind of use 5-minute highs and lows, 15-minute, 30-minute, try and do like high frequency trading. I'm telling you, for high quality draws on liquidity, you only want to focus. These are massive liquidity pools. If you just look for one a day using this, I promise you, you're going to see these setups much clearer than if you're trying to look for them off of these insignificant price levels. You want to pay attention only to session, daily, weekly, and monthly highs and lows for what we're talking about. The next thing that we're going to take a look at is the PD array matrix, order blocks, fair value gaps, and old highs and lows. I know this sounds like a word salad right now. I promise you, I'm going to simplify it all on a real chart. So I'm going to take everything that we're talking about right now and apply it to real examples to simplify it all down. But you don't need to know every PD array. A lot of people, there's so many PD arrays ICT has came up with. I mean, you're only going to focus on 3 in this. You don't need any more than that. You don't want to overwhelm yourself. You don't want information overload. I'm telling you how to find very high quality, high probability draws on liquidity using these PD arrays and these liquidity pools. Again, this is exactly what I've used to have well over 80% hit rate in my Discord since the beginning of the year. So if you just pay attention to the things that we're going to talk about, you're going to see that all this stuff really does make sense and it comes together. So I know we just talked about a lot, but all of this has a place, and here's where we simplify it. There's 3 steps to it. You're looking for one of these time-based liquidity pools to get taken out. You're looking for a change in the state delivery away from there and key PD arrays broken, the opposing PD arrays, and then clear, obvious liquidity to target. So it's not just as simple as looking for one of these liquidity pools to get taken out. You want to look for something to be clear in the opposing direction where the liquidity was just taken out. I'm going to show you guys exactly what that looks like on a chart. But anytime you think about draw and liquidity, right, you have time is the first element, and then all of this video is centered on price, what to look for in price, right? But when we can anticipate volatility in terms of time, if it's time for price to move, right? The economic calendar is the first thing that we could look at for when we can anticipate price moves and start to look for these things in price. But the first thing we want to look at is look for liquidity pools to get taken out. That's where we can start to hunt for these changes in the state delivery. And then we're looking for these PD arrays to get broken. I'm just giving you guys multi-layered confirmations into finding the highest probability draws on liquidity. So now let's take a look at the NASDAQ. I'm going to be showing you guys a bunch of examples in here of everything that I just talked about. So I'm going to simplify it all. If we look at the NASDAQ, I typically like to start off on a monthly chart. You don't really need to go that high. You can start off on a weekly chart, but we talked about the key liquidity pools. These are going to start the moves. So to find these monthly levels, go to a monthly chart and just look for monthly lows. So when all of these are clustered close together, I'd like to see them all taken out. Okay, and then once they're all taken out, what's the next step? To look for a change in the state delivery and look for PD arrays to get broken in the direction that it was going to take out that liquidity. So what does that mean? If we drop down to a daily chart, I'm looking for a change in the state delivery. This down close candle is the change in the state delivery. When price closes above the open of that, price has potentially shifted into a buy program, which means that it's going to start respecting down close candles, and it's going to start respecting breakers, things like this. This is the level that we talked about in a previous video. See that move back up? It can start respecting bullish fair value gaps, volume imbalances on the buy side of the curve. How do I know that it's just going to keep on going higher and not just come back down for sell side liquidity? Well, remember, we're looking for the time-based liquidity to get swept. That's number one. Number two is the change in the state delivery. That occurs right here. Why? Because it closed above this down close candle's open. We want to see other PD arrays break, because this sometimes you've seen it before, where it creates the change in the state delivery, right? If you're just going off of that, creates the change in the state delivery, drops back down and takes out your stop, and then maybe it runs higher. So what I've done to get a high success rate with finding draws on liquidity is simply creating multi-layer confirmations. So you're looking for the time-based liquidity to get taken out. You're looking for a change in the state delivery. Now we're looking for PD arrays that got created to the downside to get broken. What could that look like? This bearish fair value gap, it broke above that. Another bearish fair value gap right here. Include the volume imbalance in it, okay? Because ICT teaches to include the volume imbalance if there is in a fair value gap. So see the separation between that close and that open. You want to include that in the fair value gap and the fair value gap right above it. So what happened? We had 3 bearish fair value gaps get broken by this candle's close. That to me tips the hand that, okay, now I need to start looking for clear liquidity pools to target. Back to this previous slide. Clear, obvious liquidity to target. Why clear, obvious? Because the whole point in price shifting into a buy program where we're going to start looking for price to reach higher, there has to be a reason for it to go higher. It's not just going to go up to that level just because it broke these levels. There has to be actual liquidity to attack. It has to be beneficial for smart money to take price up to that level. Now, I know what you're thinking. You're thinking, well, Dan, that happened right here. Like, what about when it's all the way up there? I'm going to get to that in a second. It's going to make perfect sense what to do. But look at this right here. We had this clear high over here and this clear high over here. So that is a clear higher time frame draw on liquidity to the upside. All of these highs were clustered close together. That can be your higher time frame bias. That's why I had a weekly bias, because it created the change in the state delivery, took out the time-based liquidity, broke multiple PD arrays to the upside. Typically, if it breaks 3 PD arrays to the upside, you know to start looking for clear highs to get taken out. We're looking for smooth, clear highs after it gave those multi-level confirmations. Now, back to what I know what you're thinking right now. You're thinking, well, what happens once it already takes this out? Because that's the big question. And that's why everyone creates these YouTube videos, to try and get you to just look for the previous candle high. Once it takes that out, look for the previous candle low. If it always did that, price would always be in a range. It would always just be going sideways. So there are some times where there's no clear draw on liquidity, so you just have to work within the lower time frame. So now that you know what a higher time frame draw on liquidity can look like, what happens when it's up here? What happens when it already delivers to all those clear targets? What happens when it's in internal range liquidity and it's just chopping? That is a bias in and of itself, because you could say, okay, we had the clear draw from this discount up to this premium. It's taken out the clear buy side levels. I don't really see anything. What does that mean? It means whatever time frame we're on, go down to the lower one. So since it already took out these weekly highs, since we're on a weekly chart right now, what do we do? Well, we start looking for daily highs and lows to start moves. We start looking for session highs and lows to start moves. So you see how we're not relying on the monthly or the weekly or the daily always having a bias. If we know that it's likely to consolidate, that's all we need to know. If we know it's going to consolidate on that time frame, cool. I'll drop down to a lower time frame, a 1 or a 4 hour, and I'll look for that same, see what we just talked about? I'll look for that same exact fractal on a 1 hour chart, but I'm keying off of session liquidity instead of keying off of monthly highs and lows. So everything you just saw right here, if it's not clear on the higher time frame, you treat the lower time frame like the higher time frame. let's take a look at some examples in here where, okay, it already delivered to this weekly imbalance. It's likely to just kind of chop in there because it's not a single pass through this isn't likely. Once it leaves this higher or lower, then it can become clear again. But you just have to work within intraday levels if there is no clear draw on liquidity. So, well, Dan, how do I know when it's going to be clear on the higher time frame? You'll know when it's going to be clear. You see how this caught your eye down here? See how you looked at this and you said, yeah, it clear change in the state, right? Took out multiple levels of PD arrays. Like, this was obvious. Most of you guys saw this draw on liquidity yourselves too. You saw that this high was going to get hit and this high because it was clear, but it's not always clear. If it was always clear, the markets would be looking like this all the time. It would just be low resistance, low resistance. It would have no time to build orders. So when it's not clear, that's fine. We're using that as a bias in and of itself because we know, okay, it's not clear. All right, let's take a look at some session examples. And that's what we're going to do right now. So now that we know that we have to work within a smaller fractal, we're just applying the same exact thing just on a lower time frame. So what you just saw, we're now keying off of session highs and lows. Typically, we're only going to look for 3 types of session highs and lows: Asia, London, New York. Besides that, we're only going up from there. We want moves. If you watch the previous video, you want moves that are going to sponsor like a decent sized magnitude to where it can offer a move from liquidity to liquidity, right? I'm not teaching to key off of fair value gaps because a lot of times it's not as clear, right? I think that this is the easiest types of ways to frame draws on liquidity. So we just want to use these levels to key off of. Then we could use those confirmations that I talked about. So down over here, Wednesday previous day low, what is that to us? Why is that significant? We want to pay attention to time-based liquidity being purged. And if we go back to that checklist, we're looking for time-based liquidity to get taken out. We're looking for a change in the state, opposing PD arrays to get broken, and then clear obvious liquidity to target. So Wednesday's previous day low was taken out. Now I want to go down to a lower time frame. So I'm going to drop down to a 5-minute chart. And if this loads, if we once price takes out that low, we want to look for the change in the state. And we want to see, is there any PD arrays from the left side getting broken? Well, these 3 down close candles, price spikes above that and closes above the open. Okay, that's our change in the state delivery. If you look to the left, price broke above this Wednesday previous day low. In very old content, ICT actually talked about using these old lows and price closing above them being a real change in the state delivery. A lot of people overlook it. A lot of people just pay attention to the internal range PD arrays like these fair value gaps, but you could actually use these from the left side, look for closes above it, and now we have a change in the state delivery, a close above that old low, and a very small imbalance right here, but it gets closed above. What is this telling me? It's telling me to start looking for clear buy side liquidity to target. I want to attack. I want to find a retail trader to attack. I know retail's trying to go short in here. I'm going to attack you. I'm going to jump on your stop loss, and price reprices right up to these smooth relative equal highs. This is just a small like scalp target, but for the main range, we have all of these highs that are clustered close together. It looks like resistance. Retail's trying to get short. We're going to jump on that because for the higher time frame, what has it done now? Change in the state delivery, broke above the old low, broke above this fair value gap now. Okay, so now this can become an inversion. If we extend that out, look where the bodies are respecting. Broke above the bearish order block as well. Everything is telling me, Dan, start looking higher to find buy stops to attack. I see these clear highs. I'm going to jump on that. And then price expands higher, reprices up to the previous high. Okay, and then it takes this out. And now what a lot of people do, I did this too before, right? Like you see, okay, it just delivered to that. Okay, now let me look the other way because it took out this high, but it's good to just give it a second. Like let it reaccumulate. It already had this nice expansion back up. Just wait a little bit. So you wait. There's no change in the state delivery. See, it's not breaking through these up close candles. So you're using the time-based liquidity, but I've created these multi-layer confirmations to, okay, it took out the previous day high. I forgot to add the H there. It took out the previous day high, but it didn't create the change in the state delivery yet. It's not breaking beneath any of the opens. Keeps repricing higher. Right here. See that candle close right beneath there, that's our first confirmation that, okay, this could be changing into a sell program. What do I want to see? I want to see bullish PDRAs disrespect it. This fair value gap, price breaks beneath it. This is now going to become an inversion. This order block, price breaks beneath it. This fair value gap in here, price breaks beneath it. That's 3 PDRAs. Now it's going to start doing what? I want to find sell stops to attack. How do I know which sell stops? Just look for the smooth lows. If you look for the smooth lows, you're going to see that price is going to go to them quickly. That's exactly what happens right here. But once it reaches there, don't just look the other direction right away. Just look for one setup a day with this framework, and you're going to see it how it works very well if you're patient with it. It goes to there, okay? There's all these lows down here. This was kind of like that PM session objective, dug once more lower, and then it kind of goes in a chop because it already took out those smooth lows, but this is now the likely draw on liquidity. So why is it going to reprice back to these? Because these are smooth lows. ICT says smooth lows like to be made jagged, so that's our draw on liquidity. But it already had a big move up. It already had a big move back down, and it's a Friday towards the end of the week. I'm going to give this day to retail traders, and I said this to my Discord members. We're not going to trade today because it took out Wednesday's previous day low, Wednesday's previous day high, and one of the filters that I share in the video section in my Discord is that after these large ranges on a Friday especially, we don't want to be trading. So Discord members knew to avoid that Friday and said, we don't want to look at that. Let's focus on Monday. So price comes down, takes out Thursday's previous day low. If you just looked for the change at the state delivery, price pulls back on it. What is it still doing? It's still rejecting old lows. It's still resisting bearish fair value gaps. Everything in this is saying maybe it could go higher. Like maybe it rejects it and then pulls up higher. Like I'm not going to sit here and be like 100% it's saying it's going to go back down. But I'd say there's a high probability that if it is still respecting this old low and it's the first move up from that liquidity pool, it's still rejecting that bearish fair value gap. Yeah, it's going to set one more low. Then it comes back up, creates a change in the state delivery. Now it's breaking above these lows, breaking above this fair value gap. You can see it closing above there, broke above this fair value gap as well, broke above this bearish order block. See, here's the difference. See the break above this bearish order block right here? See how it's a strong close above it? And then you see this one over here where it's like, went above it a little bit, wick, and then pulls right back down to 50% of this order block. Everything in this is telling me, yeah, we're going to set a new low. It's not ready, not ready, not ready. But then this, it's closing above it, closing above this fair value gap, closing above this old low. Then it closes above this volume imbalance. You know, there's multiple levels of confirmation that we're going to use here. And then what is it telling me? It's saying, Dan, start looking for buy stops to attack. Where are the smooth highs at? Right here. Smooth highs like to be made jagged. So we're going to attack that. We're going to jump on those stops. Past that, we had these relative equal highs now that it left. See how Friday acts as the accumulation? And then, so these are like kind of like the smaller magnitude buy stop to target. It is still a big trade, don't get me wrong. But past that, since there's all these smooth highs, we're going to attack all of those. Okay? And then it kind of goes into chop. Right? There is a small trade in here where, see how it doesn't create a change in the state delivery? Breaks down. No change in the state yet. It didn't break beneath the open of this. Pulls back up. Then you get a change in the state delivery once it breaks beneath these up close candles, right? Then you can get a small trade down into these smooth lows over here. Goes into chop, drops back down. So that's pretty much all you need. I mean, there's another setup over here, but I don't want to bore you guys now. So this is all you guys need to frame high quality, high probability draws on liquidity. You need to know, where's the time-based liquidity at? Once it takes it out, from there, okay, what is price showing me off of this low? I'm going to look for a change in the state delivery. That's our first confirmation. I want PDRAs broken. That's my second confirmation. Once I have that and it's off of a key time-based liquidity pool, monthly, weekly, daily, or session highs and lows, and there's clear, obvious, smooth highs to attack, to target, that's all I need. And then we have 3 steps to frame high-quality, high-probability, precision-based draws on liquidity that actually work. So I hope hopefully you guys found this insightful. If you guys want to see more videos like this in depth explaining it, let me know down below, and I'll see you guys in the next video.